Things that I didn't know when I first started out on my trading journey that I wish I had.
I know it's gonna hurt, but you're worth fighting for.
So what's up and welcome to today's video. So it's been a while since I've done a YouTube upload. I think it's probably been around the 2-week mark. Not intentionally done, I've just been super busy on the back end with just so many different things trading wise, and there's so many different things that I can't wait to share. So many things have happened since, you know, all this kind of June, July, August period. So yeah, it's been interesting because I haven't really shared too much, but I'm kind of keeping it quiet for now because I want to build a foundation. Don't want to put pressure on myself at all. But yeah, things have definitely stepped up recently. A lot has changed, but I'm just kind of keeping it quiet. So it's been difficult to keep things quiet, but I'll be sharing it at some point in the future towards the back end of the year. So that'll be good. But in terms of this episode, I really wanted to bring you a video because I just think it's a very important topic. There's so many different lessons that I did know that I took into my trading journey which helped, and then there's so many different lessons that I didn't know which would have been really helpful for me to know a little bit earlier on. So that's what we're going to dig into today. It's going to be really interesting, so let's get on with today's video. So the very first thing I really want to talk about today is the emotional attachment to not only money but running profit and loss. Now this is a very important concept because this is where a lot of newbies, a lot of new traders come into the market and slip up, including myself. So what does that mean? Well, a lot of people get caught up into the fact that, okay, I'm running 5%, I'm running 4%, I'm running 8%, I'm running 9.2% profit, but it doesn't mean anything. You have to focus on the locked-in profit or the banked profit itself. It doesn't necessarily mean something if you're running 5.2% profit. It doesn't. What does it mean? It's not yours. It's not yours until it's actually banked and in your account. So focus more on that. I would say that this was a big thing for me. I was doing this for a while. I think I was doing this all the way up until 2019, to be completely honest. I always get into that mindset that, okay, cool, you're a pound, I'm running 5.2% profit, or you're a Kiwi, I'm running 4.2% profit. It doesn't mean anything. I wish I could go back in time and just tell myself the fact that it doesn't mean anything. Focus on banked profit, focus on the profit that you have locked in. So for example, if you're running 8.2% profit, don't get too caught up into that. Focus on the fact that you've got 2.3% locked in. Focus on that because that's not going to change. So if the market comes back down, and let's say you're in a buy position, the market comes back down, tags you out for the profit because you've got your stop trailed, depending on how you manage your trades. If that happens, then you've got the profit banked, right? You've banked 2.3. But the fluctuation of you focusing on 8.2% profit back down to 5.6, it's an emotional roller coaster. Then you factor in the fact that, you know, that's just one trade out of a whole sequence of trades. So if you focus on the fact that you've got, I don't know, 1,000 trades over a course of a 5-year period, if you're so emotionally attached to one of those trades out of that probability model, out of that sequence of trades, think about what that's going to do over time. That's just one trade. You're looking at profit and loss. You're so ingrained in the fact that it's moving pip by pip. Then times that by a factor of 1,000 because you're multiplying that over 1,000 trades. Your head's going to be all over the place. So mine was. I wish I could go back in time and just tell myself to just stop focusing on running profit and focus more on locked-in profit. For the most part of the first 6 months of my trading back in 2017, when I was working full-time and when I was in a trade, for example, whilst I was at work, I found it very, very difficult unless I was very focused in on a task that I had to do. I found it very difficult to detach from that, you know, those emotions of actually being in a trade and wanting to know the outcome and wanting to know what's going on within the markets 24/7. You know, I always had that almost irritating feeling to kind of want to check the charts 24/7. Okay, it's been 20 minutes, it's been an hour, I want to check the charts. What's happened? Has price moved in my favor? Has it moved against me? What's kind of happened? So I wanted to be filled in all the time. Now, this is something that a lot of newbies tend to get. It's just natural. It kind of transitions out with experience. But if I was to go back in time and tell myself one thing, you know, there's a few things that I would tell myself, but that would be one of the key things to try and detach from the monetary aspect as much as possible because it's not going to benefit you going forward. Now, this next point is something that I actually did apply really well, and I'm grateful for that because I had that knowledge back then, but This is to just focus on one style. You know, I see way too many people just jumping ship, and it's a different story if you're 2 years, 3 years, 4 years, 5 years into your journey and you're looking to join other communities or join other courses to kind of learn other concepts to apply that into your toolbox. Think of your toolbox as a toolbox, right? You're just constantly adding things over time. Okay, I like this, I like that, let me try this. It's a different mentality to then someone being 3 months into their trading and just completely learning something, completely dropping it, going to somewhere else. Learning that, not liking it, completely dropping everything, going to somewhere else. You're never gonna find what works for you, because no matter what you tried, you're getting experience, but then you're just dropping it completely because that strategy or that community tells you to do that. Now, for me, I have a healthy respect of, cool, well, if you join another strategy or you try another strategy or another style or whatever it may be, have that knowledge, keep that experience, keep everything you've learned over the past years, 6 months, 3 months in the back of your mind, because it's going to come in handy. Like I said, have a toolbox and then just add to it. Don't drop that toolbox, find another toolbox in the hope that it's going to be better. Build your own toolbox along the way and pick up things along the way. That's the best advice I will give you. A live example of this is myself in this similar situation. I've been through the exact same thing, and I approached it with the right mentality, I feel like, because I had a good foundation, and then what I basically did is looked into different areas. Okay, well, maybe I need to go deeper into price action. Cool, let me take a few bits away from that. Now I'm going into different institutional stuff. Let me take a few bits away from that. Basically combining my own strategy, my own style, because it fits me, and I have that knowledge of what I've taken away over the past 3 years of my journey, and I combine it into one different thing. So you have to just approach it in that mentality versus being, it would have been very easy for me to be like, cool, I've had this, let me drop that, go entirely to this, let me drop that, go entirely to this. But it's not the right mentality, it's not the right approach, in my personal opinion. So now the third point I'm going to touch on here is understanding, at least if it's on a basic level, how the bigger boys move the market, how the institutions move the market, because that does happen. And I don't really like using the word manipulated or anything like that, but it is kind of true. The market is manipulated to certain ways, because you have to understand that bigger institutions, the tier 1 bankers, the people controlling the market with the bigger capital, they have things in place to be able to see where the orders are placed. So if you're placing a buy order and a stop trail in certain areas, or for example a sell order and a stop trail in certain areas, they're going to see where those orders are. It's not necessarily on a micro level, but if you, here's why I don't agree with, you know, people ask me all the time, would you start a community, would you start a course? I don't really like the idea, and let me tell you why. Because especially if you're using like a mechanical based strategy, there's nothing wrong with it at all, but imagine 10,000 people place their orders in one place, stops in a very similar place. You know, it's not likely to happen, but even if it's 5,000 or 2,000, they have the ability to be able to see where the stops are. So if you're using a, you know, 20 pip stops, same entry order in the exact same place, they're going to be able to see and manipulate that knowledge and use it to their advantage. So you just have to understand that, and that's really, I don't really like, you know, that kind of thing what's going on in the space right now. But that's, I just wish I'd had an understanding of this, man. It's very basic, but at least have a basic knowledge of this and actually apply it into the live markets, because believe it or not, I used to see this, just not be aware of what was going on. I used to take typical retail positions, and I would move my stop to break even very, very quickly, take the risk off the table. It made sense at the time to do so. But the problem with that is that they will then use that to their knowledge and understand how retail traders trade and trade against that. So obviously things like pound dollar, pound yen tend to pull back to certain areas quite often. So I would find that in the live markets, but not know how to apply that knowledge. So I would take a sell or pound dollar, for example, and maybe running at 2%, have my stop at break even, price come all the way back up, tag me out for break even by the pip. Pound dollar used to do this all the time. I've got a trading mate as well. We always talk about pound dollar being typical, you know, a typical example of doing this and applying this principle, and then just completely drop out and make, you know, 5, 6, 7% profit. So it used to happen quite regularly, but because I didn't have that knowledge of how the market was moved on an institutional level, I never knew how to apply that knowledge. So I wish I could go back in time right now and just give myself that. So I'm going to drop a podcast episode down below And if it's just the podcast episode that you listen to, then check it out. It's definitely helpful, and it will definitely help you in terms of, especially if you're a newbie coming to the market, it's going to give you that self-awareness to be like, cool, this is how the market moves on an institutional level. So hopefully that helps. So today's video has been very quick, very efficient, and these are fresh points. But the reason I wanted to do this is because as I go throughout my journey, as I have new paradigm shifts, as I better myself and get a better understanding of how the market works and how my style is within the market, I learn new things, I continuously improve, I open mental doors in terms of this perspective. So it's very helpful, and I think that's where the benefit is in coming and me sharing that as well, even if it's very basic. And I can give you the right path in terms of a resource to go to, for example this week's podcast, and just other things to check out or think about, or at least spark that idea in your mind that, cool, there's another perception here, or there's another idea that I can take on board and apply into my own trading. That's where I get the satisfaction from, because if you can do that and it's going to better yourself, then that's where the value is. So obviously I've done videos in the past, I've done a lot of videos covering different principles. I would mainly check out the last two videos prior to this, where I really dig into a few points like this. So hopefully you enjoyed this video. It's been really good to put this together and give this information to you to spark some thought. So give this a thought, check out that podcast below, and hopefully you enjoyed that as well. And yeah, hopefully you enjoyed this video. See you all in the next video, the next time's video. Speak to you all soon.